So, Patrick, you're now with us, and we're in that favorite part of the show for me, talking charts, because I can just sit back and watch you talk charts, do all your Black Voodoo magic.
For sure. And so this talking charts, again, we are going to be using that Koyfin platform. And so let's jump right into it. So Koyfin, it's a great platform that you can use to get real-time data, completely free. You can do all sorts of charting and check out all sorts of analysis on there. And really, the first chart I wanted to get to is looking at what's been happening to the euro in the last 3-4 days. And so on this chart, we can see here that the euro basically started around the 111 area, and in a matter of the 5 days of this week, worked its way down all the way to 1.0944. So almost a 200 pip drop in a span of a week, and it really broke all of the support lines that were established through November and December along the 110 level. And really at this stage, it's really interesting to see, whether this is just simply a trade range where it's just going to trade to the bottom end of its range and then back to the top end of the range, or whether this is really a legitimate US dollar breakout. I'm in the camp that it is a dollar breakout, and I'm not going to jinx it because there's steak dinners on the line or on this euro trade, but right now it's breaking down quite a bit. Do you have any insights on how this is developing?
No, it's obviously terrible for us dollar bulls. I mean, euro bulls like Cuppy and I, that when we picked you off, what we thought was a great trade, but you just realized that was the bid offer spread and you had to give up a little vig, and you're obviously looking very smart. One thing I will say, though,
it is February, right? Like, I mean, this is like this year. Like, I mean, a lot can happen here.
The one thing I will say, Patrick, is that while you were at your conference this afternoon, the Euro ministers actually got together and they said that they're getting ready for fiscal. Now, It's a long way from them doing fiscal, and let's face it, they're still the Germans to deal with, but it's another step in the right direction in terms of them looking like they're finally going to put take their wallets out and spend some of those old bills that they have in there.
Yeah. And so I wanted to move on to look at the crude oil futures contract. So, by the way, if on Koyfin any of you are looking to look at any of the commodities out there, you just put the symbol for it. In the case of crude oil, it's CL, and with a 1 to look at that front month contract. You can basically pull up the crude chart. And what was interesting is that crude oil not only broke to lower lows below all of those established $51 lows, but it tried to bounce this week, and it did muster up about a $2 reaction off the low and immediately gave it back. Now, Kev, you have been blogging to your heart's content about that this is a screaming buy on many of the periodic table, and that the commodities are going to be bid very well when the mother of all stimulus has come in. By the way, those of you don't follow Kevin's work, you should check out his Macro Tourist blog. But you know what? This chart looks like shit, Kev. I mean, you're basically sticking your neck out and trying to catch a falling knife here on crude. I mean, you think that this is really going to hold here?
Well, so far it hasn't held very well, and I'm not looking very smart, am I? But Patrick,
just early. You've been early on everything, right?
Really? Well, was I early on Deutsche Bank?
Oh, well, now you bring this up. All right. Well, no, fair enough. So let's pull up Deutsche Bank for a second here, and I do have to concede, right,
yes,
that you win.
That's win. Right.
So those of our listeners, I have a slide here.
Yeah.
We had a bet. It was July 12th back, and Deutsche Bank was at the time trading more or less around $7.50, and we did a not chump change style wager. We usually reserve the steak dinner bets for when there's a real conviction. And so we were like first touch, $5, which was my bet, or $10 on Deutsche Bank, a steak dinner bet, and you got it. You nailed it.
Well, thank you very much.
And you know what? And Deutsche Bank was looking like shit. And you were just like, I guess it was really cheap, right? and you're looking all right.
Well, you guys are just too. You guys are always too bearish. It's because you cheat on me with that other show, and you talk to all these smart guys that are these hedge fund guys, and they're fast money, and they're all bearish. So you unfortunately get influenced too much with all their bearishness. And this was another case.
Okay,
of,
Deutsche Bank goes for loses 90+% of its value in a straight down line, has not had a meaningful up rally in like years, and you're like doing a victory lap like it was that you guys were being too bearish. How's that worked out for you last 2 years? I remember you writing a Deutsche Bank blog like a year ago. How'd that one turn out?
I'm probably even now. Okay, do you have any more charts for us?
Yeah, I do. All right. Okay. So anyway, the point is, crude oil and these commodities are still very weak. It'll be really interesting to see whether this coronavirus headlines really escalate over the weekend or not, or whether we have de-escalation. I mean, it's possible that things kind of calm down and lull. I mean, I think that these commodities to bottom, you need something like that because there's a lot of selling pressure at this stage on this idea that the global economy could slow during this kind of a halt, right?
Right.
So what I wanted to do, well, we have to just look at an update on Tesla. Obviously, we talked about it on that other show, and it just it hasn't really moved. I'm actually surprised that Tesla has actually flatlined here around 750. Maybe there was a big expiration at that strike or something like that pinned it into that zone. But it'll be interesting. Do you think there's still a chance that Tesla makes one more punch to the upside, or you? I mean, you weren't close to that idea.
No, for sure. I think that you could be shocked that all of a sudden the virus goes away, or let's not say it goes away. It becomes less of a factor, and the market basically writes it off. And we go to the next, the animal spirits ignite again. And I think, Patrick, that there's a very good chance that we're going to ignite a green stock bubble. I know that's crazy, but I really do. I don't have the guts.
You know what?
I don't have 1 second. I don't have the guts to buy it like Soros says you should. When you see a bubble, you should buy it. I don't have the guts, but I really believe there's a chance that that Tesla was the first one of a green stock bubble that we're going to see going forward.
Like a week ago, not a week ago, 3 days ago, you were leaning a short against the 960 high, and now you're already flipping.
No, I'm not flipping. I'm just saying. Listen, Patrick, when a stock goes down 20%, like in like the next day, like I don't know. Yeah, so I'm out. I'm not playing this because I think it's going down to 400 or anything, and I might short it again. I just thought that was a good setup. But when when you see something down 20%,
Cuppy was on the show, and you guys, we were down on like in the 400 or 500, and I said this thing could still fucking keep going higher. And now, though, I'm on the other side of you. I understand that in bubbles things can go stupid, and maybe there is one more, but it's. I feel like this could have been a major high. I do.
Well, listen, Patrick, I'm not saying you're wrong, and let's talk about that. You were saying this thing. Cuppy and I were giving you a hard time at like what? 450, saying that this was already done, and you said no, this thing could blast off, this thing could go crazy, and kudos to you because you called it, and maybe it's gonna be the Eiffel Tower formation where it goes straight up and straight down. That very well could be. I'm not disputing that in the least.
It's
but
possible.
I just think that for mine, I was just in it for a trade, and that's what it was. It was a trade, and when something goes down 20, I think I covered most of it that night or that day when it was down 20 at the close, and then maybe some the next day. To me, the easy money was like I had been waiting for that setup. I had been waiting for the signal that the euphoria had kind of been pricked, and that was it. And I always said it's going to be hard, but you should sell it. It's a better sell down $100 from the highs than it is at a new high. And that was kind of the crux of my argument.
So the next chart I wanted to talk about was Apple, and particularly looking at Apple versus Microsoft over the last few days. So Apple has been the general on a market cap basis that basically has been the single biggest contributor to the advance in the last month or more. When it was running from 270 to 330 in that final thing, it was adding $10-20 billion of market cap every day to its stock, which basically was pressing that index higher. But Apple has not really made a higher high in all of this. And it's interesting because when you take a Microsoft, which is very similar market capitalization, has just blasted off, right? Like the last 5-6 days, we saw a huge advance from 165 to 185 on the upside of Microsoft, just punching higher, and Apple just not playing the game. And so is there some rotation going on? Is everyone realizing that Apple is really just already all the easy money has been squeezed out of the lemon juice out of the lemon, and it's time to find something else that's hot. Maybe Apple's going to not be the leadership. I'm not trying to be bearish on Apple. I'm just saying, well, which I might be, but I'm just saying it's interesting that it's not leadership anymore.
Oh, there's a typical technician. I'm not trying to be bearish, but I might be.
Well.
The fact that I won't lie.
I had to talk it back because my members listening to this say, "Well, Patrick, you actually are short Apple right now," and I'm like, "It's like maybe I am. I better not say I'm not."
And the fact that you used the lemon as a metaphor, didn't give it away at all, Patrick. No.
All right, moving on. Let's talk. Let's talk shipping. And I'm not going to say the stinger symbol, which I just did, but I'm just wanted to look at the broader shipping ETF, the C, and it just really has been the whole space has been hammered I mean it's the virus, isn't it, that's being used as the predominant catalyst for this?
I'm assuming, Patrick, but I don't know. I thought it was going to bounce. And when it didn't, it did bounce slightly. And then it hit this point where all of a sudden the market was screaming higher and this thing was making new lows. I said, that's it for me. I gave up again.
Yeah.
I've lost enough fingers trying to sell, buy these things. We'll wait. I don't know where the bottom is. Maybe you do. You can tell me.
Well, I actually think the bottom in the shipping will probably come in with the bottom of a lot of the commodities that are selling. I think that these are all the targeted zones that as the coronavirus is escalating, this is where all of the selling has been concentrated to. And I think that as soon as there's a de-escalation or the whole situation is diffused with the coronavirus, I think that you'll see the bottom is going to come in within a window around that.
You're probably right, Patrick. The chart looks very similar to crude oil and copper.
Right.
One last thing, Patrick. Can you pull back up the Koyfin charts?
Yeah.
I was talking to Rob, and we were going through here, and one of the things I wanted you to do is just have a look at Factor, F-A-C-T. And this is one of the things I like about this so much is that he has these sorts of analysis that are just terrific that you can't get on most other platforms. And you'll see there that if you pull that up, you can kind of get a feel for how the market has behaved. And so for the one day, for example, on Friday, low volatility stocks outperformed small cap. Or at the bottom, you see the large cap growth was bid. One of the things I like to do, Patrick, go click on the 1 month portion and actually let's sort it by the 1 month over there on the left there.
I clicked on 1 month here.
No, up to the left there where the factors like there, so we can see them ranked by 1 month. There you go. Yeah. So you can see that over the last month, momentum 2.9% or versus the small cap minus 4.25%. Right. You can get a real feel for what's happening in the market and understand how different factors are affecting, are getting affected by where people are rotating. Because sometimes some of the best moves are actually within the market itself. Yeah. You might get days when small caps are really bid and you can make tons of money being long small caps, short, NASDAQ. I think that happened one day this week, but on the whole, you can see that this is being a trend the other way. Check it out, Factor, F-A-C-T on the Koyfin.
All right, perfect. All right, so let's move on.